Hi, this is Calvin here. I hope that you all have a great weekend. And also, today will be the last day of the month of November. So, today I'll be sharing with you all the week ahead in my weekly technical outlook on the major stock indices. So, before I jump into the various key technical configuration on the S&P 500, the Nasdaq 100, the Hong Kong 50, as well as the German 30, let's take a look at the disclaimer slides first. All right, good. Here we go. So let's take a look at the first index on the share view will be the S&P 500. So as usual, I start off with the longer term chart first. So as you all could see, this is the monthly chart on the SPX 500. So we could see that we're actually closing the month, which is this month November, on a very strong positive footing. So for this month, it's actually up close to about 12%, give or take. So based on the S&P data analytics, the this month of November, we're actually seeing the SPX 500 closing in the best month for November since 1928. So, but however, on the technical perspective, on the medium term, that means we're talking about 1 to 3 weeks time frame. I'm a bit hesitant to actually see a further push up above this 3650/70. So one of the key elements I will share with you will be the volatility index, which is the VIX. So this is actually the VIX future in the front month contract, which is December 2020. So what we could see very interesting on the VIX over here is from a technical perspective, since the high of 2672 of 13th of November, it has been trading downwards, but in this downwards motion, it's actually tracing up a kind of a very positive technical configuration, which is we call it a descending wedge configuration. So in a descending wedge configuration, what we could see over here is yes, it continued to see a series of lower high. Okay, as you can see, lower high, but the slope of the lower lows is actually lesser than the slope of the lower high. So what it means that over here is that momentum has already starts to slow down in terms of this bullish descending wedge configuration. And also if you look at the RSI already starts to actually inch up from the oversold level, which means that this downside momentum has already starts to ease off as well. So positively, what we could see over here on the VIX future is actually indicating to us potentially we could see volatility starts to increase in the coming weeks, which may not bode well for the stock indices, as we know that a higher volatility, it will may lead to what you call a potentially a further down move on the SPX 500. So this gives me a kind of a scenario where I'm pretty much hesitant to actually validate a further up move for the SPX above that 3650/3670 level. So what I'm watching on the VIX future will be at this 3356 level, which is the former swing low of 19th of November, now turns into a resistance. If you could start to see a break above 36.57, the VIX futures could take us up much higher towards 3672, which may potentially see further downside on the S&P 500. So let us go to the S&P 500 chart on the daily time frame. Okay, so as you could see on the daily time frame from here, pretty much sideways below 3650/70. So based on last week price action, we know that last week is a Thanksgiving holiday week where we may start to see lower volume as well. And also right now, since we are approaching the end of the month, which is today's month November, there could be potential also rebalancing by the 60/40 portfolio fund management holdings, where given that we start to see a strong month of November, portfolio managers may start to reduce their equity holdings to bring in line with this 60/40 percentage mix in this portfolio adjustment. So we could see a bit of what we call potential sell off as well going forward in the next couple of weeks. So what I could see over here for the S&P, the key levels to watch will be at this 3650/70, the upper boundary of that expanding wedge as I draw on the monthly chart. And also if you could look at this momentum indicator, the daily RSI is pretty flattish as well. and telling us there's a lack of momentum to actually push prices higher above 3650/70. So the near term support or the medium term support to watch will be at this 3518. Okay, so watch 3518. Similarly will be this pullback support that is that is in place since the high of 2nd of September. Now going into the strategy chart, which is the 4-hour chart. Okay, for our chart, what I'm going to highlight for you all is the 4-hour RSI. So very clearly, the 4-hour RSI is actually shaping this bearish divergence. Similar high on the RSI on the price action of S&P, but lower high on the RSI, telling to us that indicating to us that the recent push up, the last week push up, is actually facing this kind of downside upside momentum that is started to wane off. So what I'm going to do over here is I'm still maintaining that bearish bias on the S&P 500 from a medium term perspective. That means we're talking about the outlook for this week. 3770 will be my key resistance level, playing this push down towards 3518, that pullback support that is in place since 2nd of September. A break below 3518 should actually take us down much lower towards 3418 in first step. So however, if we start to see a daily close above 3670, okay, we are going to validate this another round of impulsive up move to target this 3760/3770, which is the one time Fibo extension, taking from the low of 2nd of October, project to the high of 5th of November, and projecting down towards 6th of November from here. So in overall, I'm still having this bearish bias on the S&P 500 below this key resistance at 3670, given the negative technical elements that I shared with you all earlier on. Now going on to the Nasdaq 100 over here. So a very strong month of November for the Nasdaq 100 as well. So moving on to the daily chart from here. So as you could see on the daily chart, this Nasdaq 100 has really starts to break out above this former descending resistance that was drawn from the high of 2nd of September. So right now it's approaching this current all-time high at 12466 level. So given that the S&P 500, the negative technical configuration that's seen on the S&P 500, to me, I was as we know that all US markets actually go hand in hand. So I'm actually quite hesitant to actually validate a further push up on this Nasdaq 100 to go beyond this 12466 level here for this week. So as you could see over here is that it has really broken up this descending, we call it former descending resistance level. So I will actually turn neutral for this week, given the more bearish technical configuration that was seen on the S&P 500. So neutral for this week first on the Nasdaq 100 below 12466 and this 12,000 level. Okay, so what is 12,000 level? So this 12,000 level is actually this congestion area between this 16 to 19, pardon me, 16 to 19 of November, as well as the pullback support level of this former descending resistance now turns into a pullback support at this 12,000 level. So if we could have a daily close above 12,466, then I will actually validate a further push up to start to see a brand new impulsive uplift to target the next resistance at 12,970 slash 13,100 level, which is the one time Fibo extension level as well, from the low of 31st of October 2020. So if you could see the RSI, the 4-hour RSI has already started to actually exit from this overbought zone as well. So giving me another element to actually pretty hesitate to actually validate a further up move above this 12,466. So if we start to see a 4-hour close below this 12,100 level, we could actually validate this down move. That means what we could see is that last week push up was a failure push up above this this former descending resistance, where we could see price to reintegrate back into this very uh, complex sideway configuration that is in place since 2nd of September to take us down much lower towards 11,570 in first step. All right, so now moving on to Asia, will be the index on the highlight will be Hong Kong, the Hong Kong 50 index. Okay, so as you can see, the Hong Kong 50 index right now is actually testing this major descending resistance that is in place since this all-time high at 12,000. Pardon me, since this all-time high at this January 2018 level. So previously in two occasions, on May 2019 as well as January 2020, pardon me, previous rebound has been kept below this major descending resistance at this 26,740. That I have a little bit of excess slash at this 27,400 level. It's actually testing at this level right now. Now going to the daily chart from here. Okay, on the daily chart, similar technical configuration or technical elements that I highlight is still showing this bearish divergence on the daily RSI indicator. Similar observation can be seen during 31st of December 2019 and 13th of January 2020, where the price action actually tests this major descending resistance at that point in time. Then thereafter it started to shape this down move on the index, all right, to take us down towards the 18th of March low at this this 18th of March low at 21,830 level, triggered by this COVID-19 pandemic. So right now it's actually back at this major descending resistance level again, testing it, showing this bearish divergence, which indicate to us this push up is kind of a losing upside momentum, so giving me a kind of a scenario where I'm pretty much hesitant to actually validate this bullish breakout from this major descending resistance below this 27,400 level. All right, so the near-term support level to watch will be this 25,890. So going on to the 4-hour strategy chart, which I will highlight over here. So what I have over here is I have a excess resistance over here at 27,400, slightly above this 26,740 that I have last week. So keeping this excess pivotal resistance level, looking for a potential drop in first step towards 25,890. If we start to see a 4-hour close below 25,890, it could take us down towards lower towards 25,950. So what is 25,950 is actually there's a pullback close to this pullback support level of the former descending resistance that has been taken out from 7th of July, and as well as a feeble retracement as well. Okay, let me draw the feeble retracement for you all to see. Okay, taking from this low, draw to this high. So I would say it's close to this 61.8% retracement and 76.4% retracement. Then this first support level to watch, this 25,890, it corresponds to this 38.2% retracement level. All right, so still keeping the bearish bias on Hang Seng below, pardon me, for Hong Kong 50 below this 27,400 level, access medium-term pivotal resistance to take us down much lower towards 25,890 in first step. Okay, that's the first support level to watch. Now going on to the German index, the German 30 index, pardon me. Okay, let's give a bit of time to load. Okay, this is the German 30 index. So German 30 index also, we start to see a very strong month of November, attempting to retest the current all-time high level at 13,800, which is the major resistance level. On the daily chart, as we could see, is that it's still below this, or I would say testing this 13,320 level. So what is 13,320? So 13,320 is actually the descending resistance level that is in place since 12 Feb 2020 high. So what we could see over here is that RSI is still pretty much negative, still below this corresponding resistance at this 66 level, as we could see. that is in place since 22nd of July 2020. So now moving on to the 4-hour strategy chart. Okay, so as you could see that the 4-hour strategy chart, we could obviously see a bearish divergence on the RSI, the daily RSI, indicating to us previous week move last week, upside momentum has started to lose steam. So what I could do, or upside momentum has started to wane. So what I could actually have over here is that I have an access at this last week high at 13,400. So still having this bearish bias below this 13,320 slash 400 will be the excess, given we start to see this bearish divergence on the 4-hour RSI. Pardon me, it's a 4-hour RSI, not daily RSI. So I'm still playing this bearish push down in first step to actually test this 12,880. So what's this 12,880? 12,880 is actually the swing low area of 10th of November, and also we have this Fibonacci retracement level. I'll go and draw with you all to last week high. Okay, it's actually 23.6% level. A break below a 4-hour close below 12,880 could take us down lower towards 12,600, which is also the 8.2% retracement, as well as the former swing high area of 5th of November and 6th of November. So overall, I'm still keeping my bearish bias over on the German DAX. So all in all, what I could see is that yes, we could see a very strong month of November for the major stock indices, but all of them are still coming very close to certain respective, I would say that medium term pivotal resistance level. No clear confirmation of a bullish breakout yet on the S&P 500, which is 3650 slash 3670. On the VIX futures, it's actually ticking up solely upwards with a bearish this descending wedge configuration. So all in all, we could actually start to see a potential 1 to 2 weeks of a pullback for the major stock indices. So I'm actually pretty hesitant to actually validate a further up move at this juncture. So I hope that you all have a great trading week ahead, and I see you all next in my next video.